As a heated presidential debate between Kamala Harris and Donald Trump intensified concerns over the 2024 U.S. elections, political uncertainty, combined with investor caution ahead of key U.S. inflation data, fueled demand for safe haven assets like gold and the Japanese yen. While the U.S. dollar took a sharp dip, the spike in gold prices reflects growing market volatility as investors seek refuge from riskier assets in light of escalating political and economic uncertainty. The recent debate between presidential candidates Harris and Trump created a highly charged atmosphere, increasing investor unease about the direction of U.S. policies. Both candidates offered starkly contrasting visions for the future, particularly regarding the economy, healthcare, and foreign policy. This uncertainty surrounding the political landscape has led investors to flock toward gold, a traditional hedge against volatility. Spot gold gained 0.1% to trade at $2,519.73 an ounce, while gold futures for December delivery rose 0.2% to $2,548.45 an ounce by early morning Eastern Time 0:19 ET for 19 GMT. These figures place gold near its all-time high of $2,532.05, recorded earlier this year. A sharp retreat in the U.S. dollar following the debate further contributed to gold's rise. The dollar's weakness, coupled with a drop in U.S. stock index futures, signaled a shift in investor sentiment toward caution, amplifying the allure of gold as a safe investment. The heated exchanges between Harris and Trump during Tuesday's debate left many questions unanswered regarding the future of U.S. economic policy. Both candidates engaged in fiery rhetoric, attacking each other's platforms and personal records. The intensity of the debate heightened expectations of a contentious and closely fought election in 2024. Market participants now face a difficult landscape, with the possibility of significant policy shifts depending on the outcome of the election. Investors are wary of the wide-ranging economic impacts, including changes in tax policies, government spending, and regulatory frameworks, which are likely to affect key industries. Given these uncertainties, gold has emerged as a preferred investment, with its value typically rising in times of political and economic turmoil. The proximity of gold prices to their record levels underscores the extent of market anxiety and the search for stability. Beyond political uncertainty, investor attention is also focused on the upcoming U.S. Consumer Price Index inflation data, set to be released later on Wednesday. This key economic indicator is expected to show a further cooling of inflation, a development that would likely influence the Federal Reserve's monetary policy in the coming months. The inflation report comes just a week ahead of a crucial Federal Reserve meeting, where the central bank is widely expected to cut interest rates by at least 25 basis points. Investors are keenly watching for signals that the Fed may begin to ease its tightening cycle, which could have broad implications for financial markets. However, recent resilience in the U.S. economy has tempered expectations of a more aggressive rate cut. Earlier market speculation that the Fed might reduce rates by 50 basis points has been scaled back, contributing to global market fluctuations in recent days. Despite these adjustments, gold prices have remained elevated, benefiting from a general preference for safe haven assets amid ongoing uncertainties. In addition to gold, other precious metals also saw gains on Wednesday. Platinum futures increased by 0.1%, reaching $945.50 an ounce, while silver futures rose 0.6% to $28.777 an ounce. Both metals had lagged behind gold in recent months, but the overall rise in precious metals suggests a broader shift towards safer investments. Investors remain focused on the interconnected forces of political uncertainty and economic data, particularly how these factors will influence Federal Reserve actions and broader market trends. The precious metals market is often considered a bellwether for investor sentiment during times of financial instability. Copper prices edge higher. Amid China concerns among industrial metals, copper prices also edged higher on Wednesday, recovering from recent losses. Copper, often considered a barometer of global economic health, gained 0.7% to $9,086 per ton on the London Metal Exchange, while one-month copper futures increased by 0.6% to $4.1285 per pound. Despite these gains, concerns persist over China's economic outlook, particularly regarding slowing copper demand and potential trade tensions with Western nations. China is a major consumer of copper, and any signs of reduced demand from the country can significantly impact global copper prices. Tensions between China and the U.S. have been exacerbated by recent moves by American lawmakers to impose new restrictions on Chinese industries, particularly in the technology and electric vehicle sectors. Beijing has criticized these actions, and the potential for a renewed trade war with the West looms large. Copper prices, while experiencing a brief rally, remain under pressure from these geopolitical concerns, as well as broader uncertainties in the global economy. Market participants are closely monitoring developments in U.S.-China relations, particularly any further moves that could impact trade and industrial demand. As the 2024 U.S. presidential election draws nearer and economic data continues to shape market expectations, investors are likely to remain cautious. Gold prices, which have risen in response to heightened political uncertainty and economic concerns, may continue to fluctuate as more information emerges. The Federal Reserve's upcoming policy decisions, particularly regarding interest rates, will also play a significant role in determining the trajectory of both gold and other asset prices. For now, gold's status as a safe haven asset is reinforced, with prices hovering near record highs as investors seek stability in an uncertain world. Meanwhile, industrial metals like copper face a more complex outlook, with market sentiment heavily influenced by the health of China's economy and ongoing trade disputes. As these dynamics continue to evolve, both precious and industrial metals will remain critical indicators of global economic trends.